Question 1. Which of the following best describes the primary purpose of a business owner's policy? A. To provide coverage for a business's physical assets and employee injuries while excluding business income losses. B. To combine property liability and business income coverage in one policy for small to medium-sized businesses. C. To cover only commercial automobile liabilities and employee injuries. D. To offer customized coverage based on a business's size and location, excluding property coverage. Answer: B. To combine property liability and business income coverage in one policy for small to medium-sized businesses. Explanation: a business owner's policy (BOP) is designed to meet the needs of small and medium-sized businesses by combining several key coverages into one policy. These typically include property coverage for buildings and contents, business income coverage to protect against income loss due to covered property damage, and general liability coverage. This makes it a cost-effective option for businesses needing comprehensive coverage. It does not solely focus on automobile liabilities, nor is it limited to employee injuries or property exclusions. D. Question 2. Mr. Thompson owns a small manufacturing business in Georgia. He has purchased a business owner's policy (BOP), which includes both property and liability coverages. He discovers that his warehouse was damaged due to a fire, and the damage exceeds $100,000. What should Mr. Thompson consider when filing a claim under his BOP for the damages? A. Mr. Thompson should report the damage to his insurer and ensure that the property is repaired before filing the claim. B. Mr. Thompson should submit the claim immediately, as the insurer is required to cover all the damages, regardless of the policy's limits. C. Mr. Thompson should file the claim promptly, ensuring he provides an inventory of the property lost in the fire, including any applicable documentation on replacement costs. D. Mr. Thompson should withhold submitting the claim until he has reached out to his competitor to compare the value of his business property. Answer: C. Mr. Thompson should file the claim promptly, ensuring he provides an inventory of the property lost in the fire, including any applicable documentation on replacement costs. Explanation: filing a claim promptly is critical in commercial insurance. Under BOP, Mr. Thompson would need to follow the claims process, which includes reporting the damage and submitting documentation. He should provide a detailed inventory of lost property, along with any proof of replacement costs to facilitate the settlement. Insurers typically require this documentation to evaluate the value of the loss and determine the payout based on policy coverage, whether actual cash value or replacement cost. Waiting to file a claim D or trying to repair the property prematurely A would not help with the claims process. Option B is incorrect because insurers often apply limits to claims, and Mr. Thompson must understand his policy's coverage details. Question 3. Which of the following is a key feature of a commercial general liability (CGL) policy? A. It provides coverage for employee injuries incurred during work activities. B. It covers property damage to the policyholder's own property. C. It offers liability protection for bodily injury or property damage caused to third parties by the business. D. It includes cyber liability protection for data breaches and hacking incidents. Answer: C. It offers liability protection for bodily injury or property damage caused to third parties by the business. Explanation: the commercial general liability (CGL) policy primarily provides liability protection against third-party claims for bodily injury or property damage that occurs due to the business's operations, products, or services. It does not cover employee injuries, as this would typically be covered under workers' compensation insurance. It also does not cover damage to the business's own property. B. Or offer cyber liability protection. D. Although cyber liability can sometimes be added via an endorsement to the policy. Thus, the correct answer is C, as it addresses the third-party protection that CGL policies are designed for. Question 4. Which of the following would be an example of a covered auto under a commercial automobile insurance policy? A. A personal vehicle used by an employee for business errands. B. A vehicle that the business rents for temporary use during a business trip. C. A personal vehicle used by the business owner exclusively for personal use. D. A vehicle owned by an independent contractor working for the business. Answer: B. A vehicle that the business rents for temporary use during a business trip. Explanation: under a commercial automobile insurance policy, covered autos typically include vehicles that are owned, leased, or hired by the business. This would include vehicles the business rents. B. For temporary business use. A personal vehicle used by an employee or business owner for personal use, C, would not generally be covered under a commercial auto policy unless specific endorsements or coverage are applied. A vehicle owned by an independent contractor, D, would also generally not be considered covered under the business's commercial auto policy. Question 5. Which of the following best describes the difference between actual cash value, ACV, and replacement cost in commercial property insurance? A. ACV reimburses the policyholder for the original purchase price of the property, while replacement cost pays only for the depreciated value. B. ACV is the amount after deducting depreciation from the cost of replacing the property, while replacement cost reimburses the policyholder for the full cost of replacing the property with no deduction for depreciation. C. ACV and replacement cost are the same. It both involve the reimbursement for the replacement of damaged property. DACV is the method used for valuing property and business interruption coverage, while replacement cost is used only for the policy's liability coverage. Answer: BACV is the amount after deducting depreciation from the cost of replacing the property, while replacement cost reimburses the policyholder for the full cost of replacing the property with no deduction for depreciation. Explanation: Actual cash value, CV, is calculated by taking the replacement cost of the damaged property and subtracting depreciation. This method reflects the current value of the property considering its age and wear. In contrast, replacement cost coverage reimburses the full cost of replacing the property without accounting for depreciation. Therefore, the key difference lies in the way depreciation is handled. Option is incorrect because a CV does not reimburse the original purchase price. Option C is incorrect because a CV and replacement cost are not the same. Option D is also incorrect because a CV is used for property valuation, not just for business interruption coverage. Question 6. Under the Georgia Workers' Compensation Act, which of the following statements is true regarding the coverage for employees? A. Employees are not entitled to workers' compensation benefits if they are injured outside of working hours. B. Workers' compensation benefits cover only injuries that occur at the employee's primary work location. C. Employees are entitled to medical disability, rehabilitation, and death benefits if they are injured while performing their work duties, regardless of the time or location. D. Workers' compensation benefits are provided only to full-time employees, excluding part-time workers. Answer: C. Employees are entitled to medical disability, rehabilitation, and death benefits if they are injured while performing their work duties, regardless of the time or location. Explanation: Under the Georgia Workers' Compensation Act, workers are entitled to compensation for injuries that occur while performing work duties, regardless of the specific time or location of the injury. This includes medical disability, rehabilitation, and death benefits. Injuries that occur during breaks or outside of the primary work location may still be covered if they occur while the employee is performing tasks related to their job. Therefore, option C is correct. Option is incorrect because injuries outside working hours can still be covered. Option B is incorrect because coverage is not limited to the primary work location. Option D is incorrect because workers' compensation applies to both full-time and part-time employees. Question 7. Which of the following types of coverage would most likely be included under a commercial crime insurance policy? A. Employee theft and forgery. B. Damage to the property of others caused by an employee's negligence. C. Business interruption due to a flood or fire. D. Property damage caused by a vehicle used for business purposes. Answer: A. Employee theft and forgery. Explanation: Commercial crime insurance typically covers losses due to criminal activities, including employee theft and forgery. These coverages protect the business from financial losses caused by dishonest acts committed by employees or others, such as stealing company property or falsifying financial records. Option B is incorrect because it would likely be covered under a general liability or property insurance policy, not crime insurance. Option C is incorrect because business interruption due to floods or fires would generally fall under property insurance policy or business interruption coverage. Option D is incorrect as vehicle-related damage would typically be covered under a commercial auto policy. Question 8. Which of the following is a key feature of a commercial umbrella insurance policy? A. It extends liability coverage above the limits of underlying policies such as commercial general liability (CGL) and commercial auto. B. It provides coverage only for property damage losses above the deductible of the primary property policy. C. It covers all types of liability, including workers' compensation claims. D. It offers protection against product recall and cyber liability losses. Answer A. It extends liability coverage above the limits of underlying policies such as commercial general liability (CGL) and commercial auto. Explanation: commercial umbrella insurance provides additional liability coverage that extends beyond the limits of underlying policies like commercial general liability (CGL), commercial auto, or employer's liability coverage. This allows businesses to protect themselves against catastrophic losses that exceed the limits of their standard policies. Option B is incorrect because umbrella insurance is designed to cover liability, not property damage. Option C is incorrect because workers' compensation claims are typically handled separately from liability policies. Option D is incorrect as product recall and cyber liability would be covered under specialized policies, not an umbrella policy. Question 9. Which of the following statements about the product's completed operations has an ECA commercial general liability (CGL) policy is correct? A. It covers bodily injury and property damage that occur while a product is in the business's possession. B. It applies only when the business is still in the process of manufacturing or installing the product. C. It provides coverage for liability arising from products that have been sold or completed operations even after they have left the business's possession. D. It only covers damages to property owned by the insured business, not third-party property. Answer: C. It provides coverage for liability arising from products that have been sold or completed operations, even after they have left the business's possession. Explanation: the product's completed operations hazard ECA CGL policy covers bodily injury or property damage that occurs after the insured's product has been sold or the work has been completed. This type of coverage is important for businesses that manufacture or provide services that can lead to future liability even after the product has left their premises. Option A is incorrect because the coverage applies after the product has been sold or the work completed. Option B is incorrect because it applies even after the business is done with the product, not during its creation or installation. Option D is incorrect as it covers third-party property damage, not just the insured's own property. Question 10. Which of the following best describes the function of subrogation in an insurance policy? A. It allows the insurer to cover losses that exceed the policyholder's coverage limit. B. It allows the insurer to seek reimbursement from a third party responsible for the loss after paying the claim. C. It allows the insured to claim for both personal and business losses in the same policy. D. It allows the insurer to adjust premiums based on the policyholder's claims history. Answer: B. It allows the insurer to seek reimbursement from a third party responsible for the loss after paying the claim. Explanation: subrogation is the process by which an insurer seeks reimbursement from a third party who is legally responsible for the loss after the insurer has paid the claim to the policyholder. This helps the insurer recover costs and reduce the financial impact of the claim. Option is incorrect as subrogation does not affect the coverage limit. Option C is incorrect because subrogation applies to recovery of funds, not to the type of losses covered under a policy. Option D is incorrect as subrogation is unrelated to premium adjustments based on claims history. Question 11. Which of the following is typically covered under a business income by insurance policy? A. Property damage caused by a fire that interrupts normal business operations. B. Loss of income due to a hurricane that damages inventory even if the business location is not directly affected. C. Coverage for inventory losses that occur during transportation. D. Cost of repairing damaged machinery used in production. Answer A. Property damage caused by a fire that interrupts normal business operations. Explanation: business income by insurance covers loss of income that results from the interruption of business operations due to a covered peril, such as fire. It compensates the business for the lost income while the property is being repaired or replaced. Option B is incorrect because BI coverage typically applies only when the business itself is damaged, not when inventory is affected without physical damage to the property. Option C is incorrect because transportation-related losses would typically be covered by inland marine or transportation insurance. Option D is incorrect because machinery repair costs are covered under equipment breakdown or property insurance, not BI. Question 12. Which of the following is an example of perils insured against ECA standard commercial property insurance policy? A. Wear and tear. B. Earthquake damage. C. Theft of business property. D. Intentional damage by the policyholder. Answer: C. Theft of business property. Explanation: in a standard commercial property insurance policy, perils insured against generally includes theft of property, fire, lightning, and vandalism. wear and tear. A. Earthquake damage. B. An intentional damage by the policyholder. D. Are typically excluded unless specifically added by endorsement. Question 13. Which of the following is a key feature of a flood insurance policy under the National Flood Insurance Program, NFIP? A. Coverage for flood damage to property located in any area. B. Coverage is provided for both residential and commercial properties in high-risk flood zones. C. It provides coverage for flood damage to property located outside of flood zones. D. It covers only the building structure, not the contents inside. Answer. B. Coverage is provided for both residential and commercial properties in high-risk flood zones. Explanation. The NFIP provides flood insurance for properties in high-risk flood zones, special flood hazard areas, which includes both residential and commercial properties. Option is incorrect because flood insurance coverage is not available in all areas but is focused on high-risk zones. Option C is incorrect because flood insurance under NFIP is not typically available in low-risk zones unless purchased separately. Option D is incorrect because flood insurance can cover both the building structure and the contents, though coverage limits may differ. Question 14. Which of the following is a key distinction between a claims-made policy and an occurrence policy? A. A claims-made policy covers incidents that happen during the policy period, regardless of when the claim is filed. B. An occurrence policy covers incidents that occur during the policy period, even if the claim is filed after the policy period ends. C. A claims-made policy is more expensive than an occurrence policy because it covers a longer time period. D. An occurrence policy covers claims made during the policy period, regardless of when the incident occurred. Answer. B. An occurrence policy covers incidents that occur during the policy period, even if the claim is filed after the policy period ends. Explanation. In an occurrence policy, coverage applies to incidents that happen during the policy period, regardless of when the claim is filed, even if the claim is made after the policy period ends. In contrast, a claims-made policy only covers claims made during the policy period, regardless of when the incident occurred. Option is incorrect because it describes the opposite of how a claims-made policy works. Option C is incorrect because claims-made policies are typically less expensive due to their limited coverage period. Option D describes a claims-made policy, not an occurrence policy. Question 15. Which of the following is covered under a cyber liability insurance policy? A. Loss of business income due to a power outage. B. Data breach or cyber attack affecting customer information. C. Theft of physical property from the business premises. D. Employee injury resulting from a fall in the office. Answer. B. Data breach or cyber attack affecting customer information. Explanation. Cyber liability insurance typically covers the costs associated with data breaches, cyber attacks, and other online threats that affect a business's digital infrastructure or expose customer information. Option A would be covered under business interruption policy or property insurance, not cyber liability. Option C covers physical property theft, which would be covered under a commercial property policy, not cyber liability. Option D would fall under workers' compensation insurance. Question 16. Which of the following is a key exclusion in a standard commercial general liability CGL policy? A. Personal injury caused by an employee's negligence. B. Property damage caused by the insured's business operations. C. Bodily injury caused by the insured's products after they leave the premises. D. Damage to the insured's own property. Answer. D. Damage to the insured's own property. Explanation. A standard CGL policy generally excludes coverage for damage to the insured's own property. This exclusion exists because businesses should rely on property insurance for such claims. Option A, B, and C are typically covered under a CGL policy depending on the circumstances and specific endorsements. Question 17. Which of the following would typically be excluded under a commercial umbrella insurance policy? A. Claims related to bodily injury or property damage that exceed the underlying policy limits. B. Claims for personal injuries such as slander or libel. C. Damages related to an environmental cleanup. D. Additional damages to a building caused by a fire after the property insurance limit has been exceeded. Answer. C. Damages related to an environmental cleanup. Explanation. Commercial umbrella insurance generally extends coverage for bodily injury and property damage claims that exceed the limits of underlying policies. However, it typically excludes damages related to environmental cleanup. Option C, as these are usually covered under specialized environmental insurance policies. Option A and D are typically covered by the umbrella policy. Option B may be covered by a commercial umbrella policy if it extends to personal injury depending on the underlying coverage. Question 18. Which of the following is true regarding the duty to defend a provision in a commercial general liability (CGL) policy? A. The insurer has no obligation to defend the insured if the claim is likely to exceed the policy's limits. B. The insurer is obligated to defend the insured in any lawsuit, even if the claim is groundless or false. C. The insurer has the right to refuse defense if the claim is outside the scope of the policy coverage. D. The insured is responsible for their own legal fees, regardless of the insurer's defense obligation. Answer B. The insurer is obligated to defend the insured in any lawsuit, even if the claim is groundless or false. Explanation. The duty to defend the CGL policy requires the insurer to provide legal defense for the insured in any lawsuit covered by the policy, even if the claim is groundless or false. This is a key difference from the duty to indemnify, which only requires the insurer to pay for claims that are proven to be covered. Option A is incorrect because the insurer must defend the insured regardless of policy limits. Option C is incorrect because the insurer must defend unless the claim is entirely outside the scope of the policy's coverage. Option D is incorrect because the insurer typically covers legal defense costs. Question 19. Which of the following is a characteristic of a self-insured retention, sir, in liability insurance? A. It is a deductible that the insurer deducts from the policyholder's coverage limit. B. The policyholder must pay the SIR amount out of pocket before the insurance coverage applies. C. It reduces the policyholder's premium cost by increasing coverage limits. D. The insurer handles all defense costs for claims within the SIR amount. Answer B. The policyholder must pay the SIR amount out of pocket before the insurance coverage applies. Explanation. A self-insured retention, sir, is similar to a deductible but requires the policyholder to pay the SIR amount out of pocket before the insurer's coverage applies. It is typically seen in liability policies. Option is incorrect because SIR is not a deductible deducted from the coverage limit. Option C is incorrect because it does not automatically reduce premium costs. It is a retention amount the policyholder must pay first. Option D is incorrect because, unlike a deductible, the insurer does not cover defense costs until the SIR is met. Question 20. Which of the following would be considered a designated premium under a commercial property insurance policy? A. The total cost of the policy, including the deductible amount. B. The amount charged for specific coverages, such as fire or flood protection on an individual basis. C. The amount of loss paid by the insurer after a claim is filed. D. The amount the insured must pay out of pocket before the insurer begins covering claims. Answer B. The amount charged for specific coverages, such as fire or flood protection on an individual basis. Explanation. A designated premium refers to the amount charged for specific types of coverage in a policy. This can include individual charges for fire protection, flood coverage, or other specified perils. Option A refers to the total premium, not designated for specific coverage. Option C refers to the payment made after a claim, not the premium. Option D describes a deductible, not the premium. Question 21. Which of the following is typically included in a standard commercial property insurance policy? A. Coverage for intentional acts of theft. B. Coverage for business interruption due to an employee strike. C. Coverage for physical damage caused by lightning. D. Coverage for property damage caused by the insured's own negligence. Answer C. Coverage for physical damage caused by lightning. Explanation. A standard commercial property insurance policy generally covers damages caused by lightning, fire, vandalism, and theft. However, intentional acts of theft A and property damage caused by the insured's own negligence D are excluded. Business interruption coverage B may require a separate endorsement or a business income policy. Question 22. Which of the following is true regarding property damage coverage in a commercial general liability (CGL) policy? A. It covers damage to the insured's own property. B. It includes coverage for environmental pollution caused by the business. C. It covers damage caused by the insured's product after it has been sold. D. It provides coverage for bodily injury to third parties caused by the insured's actions. Answer C. It covers damage caused by the insured's product after it has been sold. Explanation. Property damage coverage under a CGL policy typically includes damage caused by the insured's product once it leaves the premises. However, damage to the insured's own property is not covered and environmental pollution is usually excluded unless a specific endorsement is added. Bodily injury D is typically covered under a separate section for bodily injury. Question 23. Which of the following is an example of an additional insured under a commercial general liability CGL policy? A. A third-party subcontractor who is hired to perform work on the insured's behalf. B. The insured's family members living in the same household. C. The insured's own employees while performing their job duties. D. A competitor business that wants to be covered under the policy. Answer A. A third-party subcontractor who is hired to perform work on the insured's behalf. Explanation: an additional insured is typically someone like a subcontractor who is added to a policy to provide coverage for their liability arising from their relationship with the insured. Family members B. And employees C. are generally not covered as additional insureds. A competitor business D is unlikely to be added unless there is a contractual arrangement. Question 24. Which of the following is covered under an inland marine insurance policy? A. Loss of a business building due to a fire. B. Property damage from flooding. C. Loss or damage to goods while in transit. D. Liability for employee injuries at a job site. Answer C. Loss or damage to goods while in transit. Explanation: inland marine insurance covers property in transit, such as goods being transported by truck, train, or other means. It may also cover equipment and property away from the insured's premises. Coverage for buildings is typically provided by property insurance, say flooding by flood insurance, B. And employee injuries by workers' compensation insurance, D. Question 25. Which of the following is an example of a scheduled property coverage in a commercial property insurance policy? A. Coverage for all property on the insured's premises, regardless of type. B. Coverage for specific high-value items listed in the policy, such as artwork or jewelry. C. Coverage for any property damage caused by natural disasters. D. Coverage for damage to personal property used for business purposes at home. Answer B. Coverage for specific high-value items listed in the policy, such as artwork or jewelry. Explanation: scheduled property coverage provides insurance for specific high-value items that are individually listed in the policy. This is often used for valuable items like artwork, jewelry, or antiques. Option A describes blanket coverage, while option C refers to standard property coverage for natural disasters, and option D refers to personal property coverage, which is usually separate from business property. Question 26. Which of the following statements is true regarding the replacement cost provision in a property insurance policy? A. The insurer will only reimburse the policyholder for the actual cash value of the damaged property minus depreciation. B. The insurer will reimburse the policyholder for the cost of replacing the damaged property with new, similar property without depreciation. C. The insurer will reimburse the policyholder based on the current market value of the property at the time of the claim. D. The insurer will reimburse the policyholder for the amount paid for the property at the time of purchase minus any financing costs. Answer B. The insurer will reimburse the policyholder for the cost of replacing the damaged property with new, similar property without depreciation. Explanation: replacement cost insurance reimburses the policyholder for the cost of replacing damaged property with new, similar items without considering depreciation. This is different from actual cash value SEV insurance, which takes depreciation into account. A. Market value, C, and the amount paid for the property, D, are not the basis for reimbursement under replacement cost coverage. Question 27. Under commercial auto insurance policy, which of the following is covered under comprehensive coverage? A. Damage to the vehicle caused by a collision with another vehicle. B. Damage to the vehicle caused by hitting a tree or a fence. C. Damage to the vehicle caused by theft or vandalism. D. Injuries caused to a third party in an auto accident. Answer C. Damage to the vehicle caused by theft or vandalism. Explanation: comprehensive coverage in a commercial auto insurance policy covers damage to the vehicle from non-collision events such as theft, vandalism, or natural disasters. Collision coverage A covers damage from collisions with other vehicles, while property damage liability D covers injuries or damage to other people in an accident. Option B describes a collision event. Question 20. Which of the following is an example of unnamed perils policy in commercial property insurance? A. A policy that provides coverage for any cause of loss, unless specifically excluded. B. A policy that lists specific risks covered such as fire, lightning, and theft. C. A policy that automatically adjusts coverage limits based on the value of the property. D. A policy that excludes coverage for natural disasters such as earthquakes and floods. Answer B. A policy that lists specific risks covered such as fire, lightning, and theft. Explanation. A named perils policy specifies the types of perils that are covered such as fire, lightning, and theft. This is different from an all risks or open perils policy which covers all causes of loss except those specifically excluded. Option C describes a policy with fluctuating coverage limits, and option D describes exclusions but does not specify the perils covered. Question 29. Which of the following is a primary function of a surety bond? A. To insure the bondholder against financial loss in case of default by the principal. B. To guarantee that a contractor will complete a project according to the contract terms. C. To provide direct financial compensation for damages to third parties. D. To cover losses from non-payment of debts owed to the bondholder. Answer. B. To guarantee that a contractor will complete a project according to the contract terms. Explanation. A surety bond is a contract among three parties: the principal, the obligee, and the surety, in which the surety guarantees that the principal will fulfill its obligations, such as completing a construction project. If the principal defaults, the surety steps in. Option A refers to insurance, not a bond. Options C and D do not describe the function of a surety bond. Question 30. Which of the following is a key feature of excess liability insurance? A. It provides broader coverage than the primary insurance policy. B. It covers claims not covered by the underlying policy. C. It only provides coverage for property damage caused by the insured. D. It provides insurance for only a specific type of liability, such as environmental claims. Answer. B. It covers claims not covered by the underlying policy. Explanation. Excess liability insurance provides coverage above and beyond the limits of the underlying liability policies, such as general liability or automobile liability. It typically covers claims that exceed the underlying policy's limit, but it does not broaden coverage to include risks not already covered by the primary policy. Option is incorrect because excess insurance typically does not provide broader coverage, only additional limits. Options C and D are incorrect because excess liability applies to all types of liability covered under the underlying policy.